Imagine waking up one morning to find that the money in your wallet is worth less than it was the night before. This is the harsh reality of inflation, and it is a phenomenon that affects us all, regardless of where we live in the world or how much money we have in our bank accounts. In this video, we will be exploring how inflation impacts your wallet this year and what you can do to protect your hard-earned cash. So, what exactly is inflation? In simple terms, inflation is a sustained increase in the general price level of goods and services in an economy over a period of time. It is measured as an annual percent increase in the cost of living, and it can have a significant impact on our purchasing power. For example, if the inflation rate is 5%, then the things we buy, such as food, housing, and clothing, will cost 5% more than they did the previous year. Now, you might be wondering, what causes inflation? Well, there are a number of factors that can contribute to inflation, including an increase in the money supply, economic growth, and an increase in production costs. When there is more money circulating in the economy, and the demand for goods and services is high, businesses can raise their prices, which in turn drives up inflation. Additionally, if production costs, such as the cost of labor and raw materials, increase, then businesses may pass these costs on to consumers in the form of higher prices. So, how does inflation impact your wallet? Well, the effects of inflation can be seen in the everyday things we buy. For example, if you were used to spending $50 per week on groceries, but the inflation rate is 3%, then you can expect to pay around $53 per week for the same groceries. This might not seem like a lot, but over the course of a year, it can add up to a significant amount of money. Furthermore, inflation can also reduce the purchasing power of your savings, which means that the money you have in your bank account will not go as far as it used to. In addition to the impact on our purchasing power, inflation can also affect the interest rates on our savings accounts and the value of our investments. For example, if the inflation rate is high, then the interest rates on savings accounts may also be high, which means that you can earn more money on your savings. But at the same time, the value of your investments, such as stocks and bonds, may decrease. This is because high inflation can lead to higher interest rates, which can make borrowing more expensive and reduce the demand for investments. So, what can you do to protect your wallet from the effects of inflation? Well, one strategy is to invest in assets that historically perform well during periods of high inflation, such as gold or real estate. Another strategy is to reduce your expenses and save more money, which can help to offset the effects of inflation on your purchasing power. Additionally, you can consider investing in a diversified portfolio of stocks and bonds, which can provide a hedge against inflation. By understanding how inflation works and taking steps to protect your wallet, you can reduce the impact of inflation on your financial well-being and secure a more stable financial future for yourself and your loved ones.